Welcome to this Colorado Bar Association Continuing Legal Education Program.
Good. I'm Nate Trelease. I'm here with Nate Ford of Perkins, Coie, one of the leading private equity practitioners in Denver, Colorado. Nate, you're moderating a panel at the forthcoming Private Equity Conference on January 21. Your panel is focusing on how sponsors, how private equity funds bring value to their portfolio companies. Generally, the sponsors bring not only obviously financial value, but also operational expertise. Can you tell us a few of the areas in which sponsors really distinguish themselves and create value in those companies?
Absolutely, and Nate, thanks for inviting me to speak at the conference in January. Look forward to it. It should be a good conversation. A lot of people focus on the deal itself when you talk about private equity, and you talk about closing the transaction and trends in transaction values and in terms and everything else. But actually, a lot of the juice and a lot of the excitement in private equity is what happens after the deal closes and what happens when you're actually operating the company, and what value that the sponsors bring and what attributes the management has. From the value perspective, I think it's kind of four key areas. One, which has been really interesting in the last couple of years, and that's managing lender relationships. Two, which I think is most important for a lot of middle market companies, especially those that haven't done a lot of acquisitions before, which is a lot of our client base, and that's managing add-on acquisitions. Third area is managing risks through operational improvement and reporting packages and that kind of thing. And then the final area is human capital, recruiting, getting the most out of your management teams, leveraging your other portfolio companies.
Well, let's start with what is at least arguably in the current climate maybe the most difficult to manage, which are those lender relationships, credit freeze, fall of 2008, a little bit of thawing since then. What do you see and how are your sponsors helping their portfolio companies?
Yeah, we saw, I would say, a huge percentage of our time in late 2008, 2009 was spent on amendments with existing credit facilities and lending relationships, restructuring, and that's both in economics as well as the covenant perspective. And that is where we saw most of the private equity emphasis, the sponsors' emphasis working with management teams is, all right, we've got big problems. How are we going to fix it? How do we work with the bank? How are we going to manage this time of crisis? I think where private equity sponsors add a lot of value is they leverage the expertise and the relationships of their entire portfolio. Oftentimes they've used the same lender on multiple investments. So what that gives them is more leverage in negotiating with the banks. If it's just a one-off company, oftentimes there's not a lot of leverage. If the bank has the opportunity to lend more to, more successful private equity investments, or has the reputational risk at stake within the private equity community, you tend to have more leverage when negotiating those covenants, amendments, and the sticky situations from both the economic perspective as well as operational perspective.
So you generally see that your private equity sponsors bring substantially more sophistication to these relationships than the in-place management would be able to?
Yeah, with some exceptions, yes. The reason for that is just experience. I mean, one of the things, that's part of a leverage buyout means borrowing money to finance acquisitions. That's what the leverage is. Now, there's other forms of private equity, but that's a big piece of my practice. And so that means that in each transaction, you're digging into the loan documents, you're establishing lender relationships, you're living with the covenants in your portfolio companies. And so just with the volume that they see, with the network of relationships they have across the country, they're going to generally bring a more sophisticated approach. That being said, they often haven't had a chance to actually work through the operational challenges of managing working capital and all the things that an experienced management team has. So management team also adds value as well. Management team has to deal with, all right, well, how do I pay payroll on Friday without tripping a covenant in my debt facilities? So it's a good balance, and I think that's sort of one of the lessons from this panel is that it's a balance of strengths on both sides, both operational expertise of the management and their experience, as well as the sophistication the private equity funds bring.
Well, you need credit, you need liquidity, both to operate and to grow. You also need pretty intense human capital. Talk to us a little bit about how your private equity sponsors help the portfolio companies find the right people to grow their businesses.
Recruiting is a big part of that, and managing human capital. The big piece of that is getting the right management team together. And the right doesn't necessarily mean they all have the same background, they all came from the same industry. It's the right chemistry for that particular portfolio. And I think a lot of people in private equity would tell you that you can manage the success of a portfolio company in a lot of different ways, but the most important way is getting a good management team in place. So they work with recruiting firms, they have their own network of executives that they've worked with, or the next tier down that they know through their network. And I spend a lot of time on sourcing human capital. Once you have the team in place, they also support on hiring and backfilling on other areas of operational performance, and add a lot of value, because again, they've seen a lot in their years of investing, and understand what works and what doesn't work, and what's appropriate compensation and what's not, and what's the best way of incenting executives, right. Which is a big piece of getting maximum performance.
Well, I think the human capital component then probably highlights the necessity and the value of companies, as they have various private equity shops come to them, of picking the right shop for the expertise that would have those deep pools of human talent.
Yeah, no, that's right. It's a big component of it, and I think when you're looking to get support from a private equity sponsor, that's an important question to ask for a management team, is can you support me in this area? Do you have good contacts? Do you have the secret weapon recruiter out there that can help me find the right sales executive or the right finance executive? And I think that's a very important component to success of the private equity portfolio company, and it's been a big piece of what they've had to do in the downturn, because unfortunately some members of management teams have not cut it, and they've had to upgrade or find different talents. For example, a CFO who was really good with growing revenue 20%, 30% a year may not be the strongest when it comes to cutting costs. Cutting costs is a totally different skill set.
Well, that brings us to the third area, 20–30% growth, which sounds great in bad times and in good. Not only comes organically through internal growth, but also through add-on acquisitions. Can you speak about that briefly?
Yeah, absolutely. I think you'll find one of the biggest areas of value add from private equity funds is in add-on acquisitions. They lend both their team often to the acquisition process, as well as their expertise, and that starts with sourcing companies. They use the same network for their portfolio company add-ons that they do for their to find the portfolio companies, the platform companies to begin with. And so that network is hard to build. Some executives, some management teams have it. Some management teams in particular industries have good connections and can help source and have good investment banking relationships, but that's a key component of what the private equity sponsors will bring to the table. The other is due diligence. No matter how big your company is, you have a lot of operational challenges, you have a lot of things going on, and an acquisition can be a distraction. And so lending support from, whether it's talent at the sponsor, or their operating partners, or their due diligence team that they outsource, is incredibly important as part of the add-on acquisition process. And then finally, negotiating the terms and getting to closing, amending, as we talked about, the credit agreement to add on more capital if required to do the acquisition, and also opening up their own pocketbooks to fund the acquisition.
Well, Nate, you mentioned due diligence, which can be an open field of potential liability. And when we started, you mentioned the fourth major value point that private equity funds bring to their portfolio companies is help managing risk.
Yeah.
Manage it, whether or not in a major corporate transaction or operationally.
Yeah, it's a pretty broad category, obviously, managing risk. I think it starts on day one after closing. Well, it starts before closing in identifying risks in due diligence and managing risks through the diligence process, as well as through the acquisition process and the recourse and indemnification package that's negotiated. After closing, I think it starts, I think most private equity professionals will tell you, on day 2, it's okay, how do we implement a reporting package and systems and processes so that we have the information we need so that we can identify problems before they become big problems. And so much of the transition from being an independent business that doesn't have institutional ownership to becoming a private equity backed portfolio company is upgrading the professionalism of the organization, institutionalizing systems and processes so they can identify problems before they arise, as well as putting systems and processes and bringing in talent and bringing in the support you need to improve operational efficiencies. And that's something that they can leverage across all their portfolio companies and share resources in some cases, whether that's bringing in IT support, consulting support that might support multiple companies, obviously accounting and financial reporting support, but also sales. Sometimes you'll see private equity funds that have, as far as increasing the top line, and the converse is obviously managing right. expenses, but increasing the top line, have sales coaching for their management teams, so that they can kind of leverage the best practices across all their portfolio.
Well, I think what Nate Ford is telling us is those private equity funds bring almost like a universal sophistication and expertise that help enhance what management already brings. And we look forward to hearing your panel on January 21.
Well, I look forward to being part of it. Thank you for having me.
Nate.
Thank you. Bye.